Let's talk about that word hope, because I think, I'm not trying to give you a digger or anything like that, but I think a good plan is always better than hope, right? And if I look at the markets right now over, S&P 500, just for a snapshot, you look at the last 10 months, it's just been in the tank. What do you say to people that, you'd say, well, yeah, 401k, historically, great vehicle, set up these target date funds, defined contribution, company match, it's free money, practically. What do you say to those people that say, no, the market's in the tank, I don't want to contribute right now, and I don't want a 401k? What do you say to that?
In our time period of 120 years, roughly, of the Dow Jones Index and the S&P 500, anyone who's actually invested money after a 20 or 25% drawdown has realized fairly good returns over the next 10 to 20 years. It's not guaranteed over the next year. Markets could continue to go down. But for long-term investors, instead of buying at the beginning of the year at expensive stock valuations or bond yields that were below 2%, the 10-year Treasury only had a 1.5% yield for 10 years. You only got 1.5%. Now you can get 4, 5, 6% on fixed income in very safe, high investment grade quality companies or treasuries. And equity returns going forward are much more attractive as well. That's not discounting that volatility isn't scary and markets will move up and down a lot. But for a long-term investor, the starting point here is actually a much better investing opportunity than it was 9 months ago, even if we do enter a true recession in the next 6 months.